Hey guys, all content discussed is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. A lot of things took place today and over the weekend, so let's go over them. Beginning with Credit Suisse, the new Lehman's catastrophe in the making. The investment bank is said to have begun a sales process for the U.S. operations of Credit Suisse Asset Management. The unit, which includes a platform for investing in collateralized loan obligations, is expected to draw interest from private equity firms. The potential sale comes as Credit Suisse prepares to unveil a turnaround to investors next week, so they are seemingly now considering a sale of its entire U.S. asset management business. Bank earnings were positive today, which is why the stock market had a strong rally from the start of the day. Bank of America's latest assessment of U.S. consumers showed that credit card spending jumped 13% in the third quarter from a year earlier. Less affluent consumers are still sitting on savings 5 times what they were before the pandemic though, which is hilarious that the market ignores this. Another reason why markets felt more bullish today was because the new UK Chancellor, Jeremy Hunt, scrapped the bulk of his predecessor's tax cuts in a desperate effort to calm markets. He also slashed the government's energy support package. In an emergency move, Hunt rewrote the government's tax and spending plans. Markets obviously responded positively to signs that the government is finally getting its grip on Britain's public finances. Goldman Sachs seems to be planning a major reorganization. The bank is reported to be planning to fold its crown jewel trading and investment banking business into one unit as it shrinks from 4 to 3 divisions. This reorganization would see it merge its asset and wealth management divisions and shift part of its money-losing consumer business into a newly formed unit. This new structure is set to be announced as soon as Tuesday during Goldman's third quarter earnings report. China made some headlines today. Their top banks have increased their lending by 22% to $1.3 trillion for the first 9 months of the year. This signals how state groups are being directed to support the country's economy, which has been battered non-stop for years. A group of the country's 6 largest state banks released data showing new loans, most which have been directed towards their president's favored industries including manufacturing, infrastructure and technology. I want to detail what important things are taking place for the remainder of this week. Last week's stocks ended red, as the enthusiasm for Thursday's rally died off. The S&P 500 and Nasdaq were deep in the red while Dow Jones came off green. We know that CPI came in at higher than expected, but it wasn't a disastrous report, which led to that huge bull run that we saw. This week, we will see what the current administration's plan to take new steps towards lowering gas prices is. We are also set to have tons of very important earning reports from some of the biggest and prominent companies, which will have huge ramifications into how the S&P 500 trade. Beginning today, we saw Bank of America, Charles Schwab and other banks have positive earning reports, which led markets to become very bullish, hence the run we saw. Tomorrow on October 18th, we will have earning reports from company Johnson & Johnson, Lockheed Martin, Netflix, United Airlines, Interactive Brokers and many other corporations. We will also get the industrial production data and Eurozone Economic Sentiment Index for the month of October. On Wednesday, we have earning reports from Tesla, IBM, Abbott Labs, Equifax, Ally Financial, M&T Bank, Biogen, Procter & Gamble and many other big corporations. We will also receive new reports for the housing starts, building permits, and UK inflation rate all for the month of September. On Thursday, we get earning reports from AT&T, Blackstone, Snap, Nokia, Webster Corporation, American Airlines, Barclays, Dow, Union Pacific and many other notable companies. We will also get existing home sales numbers for the month of September. Lastly, on Friday, we will get earning reports for Verizon, American Express, Goldman Sachs, Autoliv, HCA Healthcare and a couple other reports as well as the Eurozone Consumer Confidence Flash estimate for the month of October. I am mostly excited because of the number of key updates on U.S. housing markets. We will get the Housing Market Index, which tracks industry sentiment among homebuilders. The following day, the U.S. Census Bureau will release September housing starts and building permits. Housing starts are expected to fall to 1.48 million in September, down from an unexpected strong reading of 1.58 million in August. We then also get existing home sales figures. Existing home sales are projected to have declined to 4.7 million last month, which will be down from the 4.8 million in August. Remember, the high and rising mortgage rates will dampen home buying demand for months to come. Rates have more than doubled since the start of 2022, when the average 30-year mortgage rate stood at 3.11%. Lastly, I wanted to touch on the run-up we are likely to see in the market as a result of the positive earnings from the banks. You will begin to see a lot of analysts on TV and the corporate media say that consumers are spending, that they have good healthy amounts of money and that they are employed with good credit. They are now beginning to say that because people have lots of money, and we live in a consumer-based economy, America is, by default, on a strong path. This could not be further away from the truth, and the fact that the corporations these individuals work for are not buying anything at these levels shows that they are just saying the wrong things for the camera. The reality is that central banks want to tighten things up, which means things are going to be breaking soon. The only reason the stock market is actually up is because certain organizations are coming to its rescue to pump things up. The recent tumult we saw in the UK shows just how unstable and uncertain things are. In fact, it's funny analysts are all of a sudden bullish on TV when not too long ago, financial management at BlackRock Bob Miller said that the recent performance that we saw in the bond market of the UK is likely to be repeated again where leveraged strategies are in place, which by the way, it's almost everywhere. When you tighten financial conditions to this level of aggressiveness, things break. And where exactly do things break first? It is almost always in the levered strategy. UK pension fund has been using an approach called the liability-driven investment to hedge against declines in government bond yields. This strategy backfired, revealing the big risk in the country's financial system. Things shifted then the announcement that pensions funds did not have enough cash to cover their losses on their liability-driven investments. They had to sell liquid assets including government bonds. Of course, today the UK government reversed course on its stimulus plan to help stabilize the market, which in other words means they had to make something up this weekend to save the country from sinking into a financial black hole. The push towards a more aggressive fiscal policy kicked off more pressure in an already deteriorating market, but the proximate cause of the real stress was the levered liability-driven investment business model. If you have to borrow to sustain your strategy and you have to pay higher margin costs to maintain your leverage, you are in a really difficult spot, which is where the UK is sitting on. We are likely to begin seeing a repetition of the events we saw last week in the months to come, so don't be shocked when you see the breaking news again. You contrast all of this with what these bankers and so-called analysts are saying on TV about how the economy is strong and we are likely to see a global bounce back because we are supposedly strong, and you begin to wonder what gives. You want to know what people do when they think the economy is going to shatter? They tend to save up and load up on cash, which is what we have been seeing. Yeah, spending is up, but it is only because it is compared to last year. Pre-pandemic comparisons are horrid to look at, and the problem is that the sentiment of things to come is worse than last year, which spells grave danger. Remember, whatever people think will happen in the economy tends to actually materialize because of bias. That's one of the shortcomings of living in a spending economy. We could begin to see markets bounce up, but remember what we talked about last week about market cycles. CPI comes, markets begin to bounce, then they start selling off as common sense begin to return. Right now, we are likely to face the typical stubbornness to accept that are facing hard times. Investors want stocks to pump, but the reality is that big money and now people in increasing chunks are not buying in large amounts. These are fake pumps that will catch the ignorant and the stubborn in a bad spot, so stay ahead of them all and don't fall for the traps. As far as GameStop and AMC go, no significant news have come out. GameStop investors continue to DRS their shares out of the market in large droves, which is great to see. I cannot wait for the next GameStop earnings report to show us how many shares have been directly registered. I had some people asking me what I think the next AMC earnings report will be like, and I'm afraid to tell you that I think the next report will be bad. This is because during the last 2 quarters, AMC theaters had a ton of blockbuster films and they barely ran green. This quarter has not had a lot of blockbuster films, so I highly doubt that it will be green. Those are of course my opinions on what the next AMC earnings will be. I will continue holding all my meme stock shares down to 0 or to the moon. All in all, that is all I have for you guys today. It's a very short video since not a lot took place. I hope to see you guys on the next one. Today we had a massive successful trading session with a total of 11 alerts, all profitable and running well past their target marks. Investors, veteran and new alike, made gains. As you can see on the screen, the alerts hit their goals. If you are a day trader or have been thinking about starting and need somewhere to help you, my Discord provides great alerts and great training into getting started and maximizing your potential. Feel free to tag me in a comment if you have any questions. Thank you for watching my videos in its entirety, you guys mean the absolute world to me. I cannot believe we are about to be almost 2 years into this play, crazy how time flies by. I hope to see you on the next one and to the moon.